What is up, everyone? Welcome to another episode of the Dorian Show. I'm your host, Dorian, and welcome to another episode, everyone. Thank you guys for listening on this, wherever you're listening to this to. If it's on YouTube, on your phone, or on your computer, thank you for watching my bald head. You know, it's quite a shiny head, actually. I don't even wax or anything, but thank you guys. And for you guys that are listening to all the podcast apps, Spotify, Google Podcasts, Apple Podcasts, all the other ones, maybe you're driving, maybe you're working out, maybe you're just at work listening to my dumb voice. And I just want to thank you guys all for listening. If you're not subscribed on YouTube or any of those podcasts, please subscribe, right? And if you're watching this on YouTube, please like it. You know, it helps the algorithm. It makes me feel better about myself. If somebody likes me. All right. So yeah, man, it's a new year, 2022. I must say, like, the Rona's been not bad to me. You know what I mean? Like, work from home is pretty sweet. I get to work on my personal goals. Last couple of years, I lost some weight. I gained some weight. I mean, it's like a roller coaster ride, you know, but I know a lot of people out there suffer because of the Rona, and I hope this will all end. You know what I mean? Like, I want people to just go back to work, businesses to open, and for kids to stop wearing those dumb masks, I guess. But yeah, there's some good signs out there that deaths are not rising because of Omicron. You know what I mean? So yeah, I hope everybody has a good 2022. Last week I shared a little bit about my goals, and I didn't really have a good financial goal. So I know a lot of you guys are about that money. So today I'm going to talk about making passive income. All right. You know, there's a lot of videos out there and a lot of like articles online about passive income, but there's not really any like passive income, right? When we think about passive income, we mostly think about things that we could just make money in our sleep, and we don't really need to work for it. Like, we don't need to think about it at all. And nothing is completely passive, but some are definitely more than most. And I'm a lazy guy when it comes to everything in life, you know. So I mean, I'll tell you the ones that I feel are, that take the least amount of work, but probably have the best outcomes. You know what I mean? Like, some people think buying an investment property and renting out their rental property, their home, is the passive, but it's really not that passive, is it? Right? You need to deal with the tenants. If they're good, great. If they're bad, oh my God, you think you're going to be passive about that? If something breaks, are you going to be passive about that? You know what I mean? Like, even if you hire a property management company who takes like about 6 to 10% of your rent that you're renting it out for, like, you have to deal with them too. You know what I mean? I mean, I don't. I'm not saying like having rental properties are bad. I just think it's not as passive as people think they are, and it's a lot of work. And especially if you only have one property and it's really small, and it's just the amount of work for me doesn't sound like it's worth it. You know what I mean? I feel like if you have one property and two properties, like, your stress level don't go up by that much, right? Your first property is like the worst, and every one that you add on, like, it doesn't add much stress to it, especially if you get a property management company, right? So, I mean, I might one day be a landlord, be a slumlord, as they say. Maybe one day if I have enough money, but nowhere even close to that. But yeah, here are the ones that I think are the best passive incomes. Okay, first of all, there's bonds, but I don't know anything about bonds. One of those, the returns suck, blah blah blah. So we'll skip those. We're just skip bonds, man. We're not gonna buy bonds for a while. There's no value in it for like the last, I don't know, like 20, 30 years. Like, it's all about stocks, baby. It's all about stocks. All right. And that's why the first one I'm going to talk about is are buying stocks. Okay. And there's different types of stocks that you could buy that are all going to grow in value, right? If you guys are looking specifically like passive income, meaning like you have a cash flow coming in, then you're looking at dividend stocks. But I think for most people listening to this is you just want to be able to grow your money, right? Like it's not going to do you any good if you get a year's passive income of like $1,000 because that's not really life changing. So what you want to do is for that portfolio growth, you want that dividend to go back in. You want that $1,000 a year that you're getting in dividends grow to like $100,000 a year. And how you do that is just buy stocks. Okay, there are three types of stocks. The first one you could get index funds like the S&P 500 index fund, which is like a bucket of this of the all the stocks in the S&P, and they do give a dividend, right? And just what history has told us, like if you buy a stocks, like over time the value of the stock will grow. You know what I mean? So if you put in $100 today, it might be $200 in 3 years. You know what I mean? And then that's in itself is you could think of that as like a passive income because the value of the stuff you own is going up. And then if you need the money, you just sell the stock, right? Therefore, you could get your income that way. So first one is do index funds, probably the most the safest that everyone says, but like even I don't even put that much money in index funds. I think I'm smarter than the market because I buy individual stocks. But guess what? If I just put all my money in index funds, I would have been like 10 times richer. Insane. 10 times richer if I just bought the index funds instead of chasing individual stocks. But I'm a dummy, so don't be a dummy, guys. Just buy index funds and watch that portfolio grow. Just keep putting money into it, and one day you'll have enough where you can live off of it, right? And it might be sooner than you think if you're more aggressive in investing right now. Obviously, the other kind of stock is like dividend stocks, and there's stocks out there that's been around for a long time that pay like 2% to even up to like 5-10%. You know what I mean? I think some of the stocks that pay dividends that I own are Pepsi, Visa, Cameco, I think pays, British Petroleum, Disney. Disney stopped paying paying dividends because of coronavirus, but they're going to start paying it back pretty soon, I'm assuming. And these stocks are pretty good. Like they, let's say they give you $100 for dividend, right? And what you should do is take those dividends and like reinvest it into stock. And you could do this automatically, right? So every time for me, let's say Pepsi gives me a dividend, I just have them automatically buy more of Pepsi stock with that dividend. So over time, I'll just like, it just balloons, it snowballs, right? It's called exponential growth, which is one of the wonders of the world. You know what I mean? If you, I remember as a kid to teach us exponential growth in 4th grade, I think the teacher was like, hey, would you rather get $100 every day for the rest of your life, or start off with getting a penny and then having the amount double every single day? And like if you do that, you'll see that penny being doubled every single day, like 1 to 2 to 4 to 8 to 16, like it will surpass $100 like way sooner than you think it will. And that's pretty crazy exponential growth, but that's the idea right there, that over time exponential growth, over time, like dividend and reinvestments, and exponential growth. It's a killer. You'll be way better off if you just own stocks that they don't even have to give out dividends. You know what I mean? Like stocks just go over time, but if you put dividends, you can actually see your money going to work. It'll list it out, which is nice. It's nice to see that even if you're not buying more stocks, your dividends are kind of doing it for you. You know what I mean? And then there's also something called REITs, real estate. Real estate investment trust? Basically, like if you don't have the money to invest in real estate, or you don't want to deal with the hassle like I do, like I just buy REITs. You know what I mean? What REITs are basically, they are basically a fund that invest in different types of real estate related activities. You know what I mean? There are ones that like invest in like single family homes, rental homes, and then they have a portfolio of homes, they rent it out, and then I think they pay like 90% of their income as dividends to people. So some of these REITs, which are traded on the stock market, will give like higher dividends, like even like 3 to 10%, right? I invested in Annaly Capital. It's a mortgage REIT. So you're basically, the company buys up all these mortgages and buys and sells mortgages, and then they make the percentages off of that, make interest off of that. I'm sorry. You know what I mean? And then those are a little bit more risky, I say, than like actual physical property mortgage REITs. Sorry, but then they give like 10% interest rate a year, which is a lot. And then and if the stock price goes up, like that's even more money that you would be making. Like technically, when I look at my like when I bought the price of Annaly, NLY ticker, it's a lot. I'm technically down, right? I bought it like at $9-ish, and then I think the price of it now is low. It's like, I don't know, what is it? I don't want to tell you guys the wrong thing, so let me see. So I bought Annaly NLY around like $9 a couple years ago, and it's like under $8 right now. It's like $7.82, which means I'm down like quite a bit actually, right? But actually no, because of the dividends are so high, like I overall I'm making money because I have all this like free money, right? Because they give me 10% a year. So like let's say I bought like a $10,000 worth of stock, and at the end of the year I get like $100 in dividends, and $100 it's free money technically, and I just get $100 worth more of that share, and that $100 is giving me 10%, which is $10 if you see where I'm going. So it's just like my money is making me money. So overall, I'm actually up in the Annaly, NLY mortgage REIT. But yeah, that's just the beauty of dividends and just owning stocks in general. I think stocks are probably the best asset to own, even compared to housing, like real estate. I mean, but maybe that's just because I don't really understand real estate too much, because there are benefits to real estate. The tax write-offs are fucking great. You know what I mean? The tax write-offs of real estate are great. You get to take out low interest loans against your home, which is great, which a lot of people don't have access to, because I don't have access to that anymore after I sold my home. But just the hassle of like owning it and dealing with people is just too much for me. I'd rather just invest it in a REIT, right? Let's say I want more. I want to have real estate. I just don't want to deal with it. I'll just invest in a REIT. Give me my 3 to 10% in dividends, and I hope it grows. And then, I'll pay my taxes. Whatever, IRS. I pay my taxes, dude. Whatever, take my taxes. I don't need my tax returns if it saves me the hassle. Okay, but yeah, so that's stocks. The next thing I want to talk is, it's kind of the same, right? You're investing in something that hope it go up with very little maintenance, and that's cryptocurrency. And here you guys will, roll your eyes and say like cryptocurrency is a scam, and it might be, I don't know. But I think there are two that are pretty safe that I am investing in myself. Okay. And those two are Bitcoin and Ethereum. And I know there are a lot of people that buy a bunch of other ones like Doge, Shiba Inu, and all these other ones that are just like jumping up many, many, many folds. And you could buy those. I mean, just know that any investment could go down to zero if you're comfortable with that. But I think the two safest one right now is probably Bitcoin and Ethereum. Sure, it'll go down and up over in the short term, but I think over the long term, it's just going to go up. Like, I don't think Bitcoin's going anywhere. I think a lot of people are into it. You know what I mean? Like, I think it's so widely accepted already. You know what I mean? Like, Staples Centers at the Lakers, they're not a Staples Center anymore. They're Crypto.com arena. And that's how big cryptocurrency is going to be. I don't think it's going to go anywhere. And the biggest ones are Bitcoin and Ethereum. And I think everyone's just accepted the fact that Bitcoin's digital gold at this point. I don't know if, I mean, there are other people are telling you like, oh, there's better Bitcoin out there. There's better cryptocurrencies than Bitcoin. There's better. There's stuff better than Bitcoin. But they're in the fringe, you know, and those might pop. But like overall, I think the longevity of it for a store of digital value, I think Bitcoin's where it's at. I don't own a lot of it, but I own a little bit of it. And I'll probably put more money into it in the long run, you know what I mean? And I think the value of it will just go up. I don't know if it'll go up more than like $50,000. You know what I mean? Maybe, I don't know how long it'll take for it to hit 100K for Bitcoin, but I think it might get there, but it's not. It's already at like close to 50,000, right? It's like 47 or 46 right now. So that's only double your money, but it's still a good store of value to diversify. Not just have stocks, but have some cryptocurrency. Ethereum is it's more than just a cryptocurrency, you know what I mean? You know what I mean? Like it's more than a store of value. Like a lot of programs and a lot of businesses are built on top of the Ethereum network. So all these stuff will need to use Ethereum. And sure, Ethereum could be replaced by something that's cheaper, more efficient, but it has what they call like first movers advantage. And I think that the NFT thing is already built on top of it. So it's like, there we got so many users on there. And I mean, and I think Ethereum is probably going to stick around. I honestly think like Ethereum, maybe other competitors of Ethereum will be around too, like maybe Solana, which I don't know too much about it, to be honest. But I think likely there will be a couple other cryptos like the type of Ethereum where they're like a network and they are programs are built upon it. I think there'll be a couple of them that will dominate the crowd. Kind of think about it as like Apple and Google's Android. You know what I mean? Like people just develop their stuff with multiple platforms, and I think that's what people will do. Like people will start just using Ethereum and Solana chains to build their programs in there, NFTs and all this other stuff. So I think crypto is good. Just to invest in the coin, and then if you want to have like higher returns and you want to juice your returns on crypto and get some dividends on your crypto, so to speak, I'm gonna say I do crypto lending. You know, so I mean, crypto lending. What am I doing in crypto lending? I'm using something called Celsius Network that I've talked about. I think maybe my first or second podcast, and I mean it's high risk. It's a new business, more or less, and there, you know, I mean, a lot of people are saying it's a scam, but I don't think it is. But you know, at your own risk, I feel like your risk tolerance is determined by you. I mean, obviously, it's way more risky than stocks, but I like to diversify. You know what I mean? And that's what I'm doing. You could buy cryptos that are like USDC, which is supposedly you can always trade out for 1-to-1 for US dollars. USDC, if you put that onto Celsius, I think they're giving like 8% dividend, annual interest, paid out weekly. So that's another way, you know, I mean, to grow or find this like because your bank accounts aren't giving you any interest in your home in your money for your money. Your money is actually losing value, you know, especially because we're seeing like crazy inflation this past year, even though like Jerome Powell is like, it's only 5% inflation. Like, have you tried buying meat at any grocery store, buddy? The cost of steak has gone up 50%, bro. That's all I spend my money on is just steaks. So yeah, inflation is high, so you need to protect the value of your money or of your assets. So, you know, I put a lot of it, most of it in stocks, a little bit on crypto, and then I put I put a lot of like cash in USDC and put it on Celsius. You know what I mean? That's fucking nice. I have to say it's fucking nice. I put it like pretty significant amount. All right. You know what I mean? Every week, every Monday, I look in my account and I get like $200, 200 USDC, which are equivalent to dollars. Every Monday, I wake up. I didn't do anything for it. Just $200 more in my pocket, dude. And that's, I think it's a good way to do it. I think they also give out interest on Ethereum and probably like 5% or something like that, and also on Bitcoin. So 6%, I think, for the first quarter Bitcoin. I don't know. I gotta check on that. But yeah, I use Celsius Network crypto lending. So those are like the main two asset classes that I use to build passive income for me. And people are like, "Oh, aren't there more than that?" I'm like, "Nah, dude, none that are like really passive, right? All I got is Bitcoin and Ethereum, crypto, and I lend out USDC. So I'm like making the value of Bitcoin and Ethereum should go up over time, and then I'm lending out my USDC. Hopefully, I'm getting high interest back on that, and also stocks. This is like most of my money, by the way. I think not financial advice, but like stop fucking holding cash. Like if you just hold cash, like that cash is not doing anything for you. You need to imagine your cash as something that just. I imagine your cash as workers for you. Let's just say, like every dollar should be making you some money. Like they need to be, what's the word they're talking about? I don't know. They have to be productive. Every dollar you have should be productive, right? Fine. There are some that you keep in your bank account for emergencies. Think of those as like I don't know, like your. Think of them as like security, people that protects you. You need a guard. Those are your money, right? And then the rest of them need to go out there and make you some more money. Think of it that way. All right, I think I rambled enough for like 22 minutes almost. So thank you guys for listening to this. Again, I hope this is helpful for you. Just to have somebody like me talk about, I'm a nobody, you know what I mean? But I'm able to save a lot of money and put a lot of it in stocks and crypto and but yeah, I hope that was helpful for you. Thank you guys for listening. If you're on YouTube, please like and subscribe. If you're on the other podcast apps, Spotify, etc., Apple Podcasts, subscribe. Thank you guys for listening. I love you all. Peace out. Goodbye.